Okay, here we go. Haven't done a video in a while and wanted to kind of get things up to date and show you guys what's going on. Last video that I did, again, I showed that we were in the fifth wave from, this is the weekly chart of the ES, um, ES or the S&P 500 continuous contract. We had one, two, and if you don't know Elliott wave, they usually talk about 5 waves. And again, I just am looking at this, squinting my eye, and I would even change this to a line chart so you can kind of see what's going on. But you have 1, 2, 3, which the third is always the longest. The fourth wave, again, just doing a little back, again, education for some of those that haven't looked at this before. This fourth wave has to be longer in price and time than the second, and now we're in the fifth wave. Now it has exceeded my target, okay? And here's the biggest thing that I want you to know is that if it exceeds your target and keeps going up, that's cool. Again, I did tell you guys, and again, you would see on newsletters that I have posted. Again, if you want a copy, you can shoot me an email at max@maximusanalysis.com. And I will send you the newsletter that I had over the election, the November election. And this goes back a while. Again, this is the weekly chart. And you could see that, again, this was a very, very volatile week. Again, if you look on the daily chart, which we'll go to right now, you could see how volatile this was. This is the November, this is the, what was it, the 7th? Or 8th or whatever, but this was a violent candle, came down to a critical level, and now is floated and is continuing to float up and down. Don't get long here. If you didn't want to get long here, or even here, again, I understand this. I wouldn't trade this bar with the futures. I would use the ETF, the SPY. But if you didn't like it here, please don't go long here, because if you do, the minimum you put your stop is under 2,300. Now, I thought it was going to go to 2272, and then the most it has was 2,300, and I was wrong. But I'm not starting a position. I'm waiting for my trade to set up. And really wanted to take this time to talk about one of the most critical things in regards to business on a whole, but especially with trading. Now, people think that trading or business or money is made in buying and selling stuff when you sell it. Buying and selling stuff, the money is made when how you purchase it. So I give you a prime example. Let's do something as far as a car, right? If you are seeing that a car, let's say you can get a car for $3,000 all day. You're not going to make that much money if the whole market can get at 3,000 and they put in their little markup or margin or whatever. But if you wait until you find the deal where that car is 2,000, it actually makes it hard for you not to make money, because worst case scenario, you sell it where most people are buying at 3,000, but then you can look at kind of getting it more profit than the average person buying 3,000 because you purchased $1,000 less. Same thing with stocks. Again, you don't want to purchase something at just willy-nilly. This type of action, I want no part of. This type of action, I want no part of that. I want no part of this. Again, trading a breakout, I don't like breakouts. I wait for a pullback or something. I just don't like them, because most of the times people are not going to put their stop where they need it to be. If you put your stop, if you traded a breakout here, first of all, they're chopping you to bits. And this is the daily chart. So again, that happens a lot because a lot of people look at this time frame, and that's the reason why I like using the weekly chart. But if you're trading a box range, okay, after a huge run up, you're missing, again, you're missing the big picture. You're trading this. Somebody say, well, that's what, but you're not putting your stop where it needs to be. And if you're not willing to do that, you haven't bought at the right time. Now, these are scarier trades, but you got to trade these markets at the extremes just based on the type of movements. With a weekly chart, you would have to wait. Again, if you miss the trade, you have to wait, and it sucks. I give you an example, housing. Again, if you bought a house, if you wait for your deal, again, nothing's perfect, but if you wait for, say, listen, I'm looking for a house at this price because I know if I get it in at this, if I'm looking to buy or sell pencils, I need to get it at this price so that I know I'm getting a good deal through my suppliers. And again, that's why people travel all over the world when they buy things like that, because they want to get the best price. So when they come back to their market, it puts them in a great situation to make profit. Use the same type of technique in all assets or facets of your life, but especially with trading. Wait for your price to come. Wait for where you want the price to go to. Because a lot of people, again, some might trade this, but I'm 10 out of 10 times I'm not taking a trade like this, because most of the time you're just going to get chopped. If you're using options, most of the time you might, especially people using such, only 30 days out. This is 30 days. If you wanted to go long here, this is 4 candles. That's 30 days. That's 60 days of sideways action. Maybe you get a little pop in, but you've decayed so much that, and most of the people are trying to go cheap on the options and buying out of the money. Those decay more than you buying deeper in the money. At least you have some type of value left when it goes in. But I'm trying to let you guys know that, again, now is not the time, because there is going to be a pullback. Again, the euphoria is in full gear. It is, you just don't want to get caught on that. And again, I'm going to reiterate that, because in my last video, some guys were saying, listen, and another thing to think about is, again, don't look at previous support levels and resistance levels first. Just because this is an Elliott wave, it means that it is going to correct. You still want to see how it corrects. You want to see if it gets below previous, let's say this previous high, and then gives you another extreme reading under this low. Then you take the short. But right now, again, we are at extreme levels. Even if we're talking about from this breakout is 1, 2, 3, 4, 5. Last video I told you I like the Fibonacci sequence of 5 to 8, and that's on all time frames in regards to where the trend is. If it's retracing, I like it to retrace into that number. If it's going up, I want to take off at that number. Again, nothing lasts forever, and you got to make sure that you're looking at things properly. So I just wanted to kind of talk about that, because I'm still have my same, again, it got up 50 points higher than I thought it would, but that doesn't mean that now all of a sudden I'm having regret. I'm saying everybody's making money except for me. Let me get in, because I might, if you don't have a trading strategy, unfortunately, that's why people chase, because they don't have a strategy that they've seen proven over the numerous over their trading career. So anything that's hot, they want in. Anything that seems like, because they'll miss the trade, like there is only one trade. Again, you could trade on a 60-minute. I don't care. You wait for your trade to come. If you miss the trade, that is a part of this business. I'd rather wait for my trade parameters to set up than chase because I missed it. And you, again, I want to let you know, you will miss trades. Be an adult. Have respect for your money. Wait for the trade to come back. Again, like I said, I thought it was 272. And then I admit if you're wrong. I was wrong. I thought it didn't have much gas over that. There's not much more. But with that being said, now is not the time to get in a long trade unless you, one, are willing to put your stop all the way down at 22.30. Or, no, that's pretty much it. If you're not going, and then where's your target if that? 2,500? You think it's going to get there immediately? Wait for the trade. Take care.